guys, this is Wade with Trade ATS. I want to welcome you to this week's analysis video where we try to figure out which FX pairs are going to be the best to trade for this next following week. It is February 17th, 2019, and with that being said, let's get into it. I want to start this video off quickly, a little bit differently. I want to do a quick lesson, just a quick refresh. I know a lot of you guys know this, but because the markets have been somewhat sideways, especially the last couple of weeks, there's been moves. Don't get me wrong. There's definitely been some moves, some great opportunities. But overall, the markets, we're not having huge trending moves right at the moment, at least on the majors. What I want to do is I want to give you guys a quick refresher as far as when to be less aggressive and when to be more aggressive. As you guys know, with ATS methodology, we're always going to have a minimum of two charts. We're going to have an entry chart, which is going to be your smaller time frame, and then we're going to have a directional bias chart, which is going to be your larger time frame. This can be the 15 into the 4 hour. It could be the hour into the daily. It could be the 4 hour into the weekly. You pair these time frames up basically, and you look for opportunities based on those time frames according to the times that you're able to trade. If you have, work schedule or whatever, you want to be a trader, you want to trade, but you don't have the time to get up and scalp the market, then you're probably going to be someone that's looking at possibly the 4 hour into the weekly. You're looking for maybe a handful of opportunities throughout the month where you can get 50, 100, 200 pips on the move. If you're going to be a shorter time frame trader, I know a lot of my guys, they get here in California time, we get up when the markets start moving around 4:30, 5 a.m. and use the 15. I know a lot of my guys even use the 1 minute into the 15, and then they'll back that up with the 4 hour. It's pretty aggressive, but they've been doing it a long time. So it just depends on what you're trying to do. But at the end of the day, we need volatility. Whatever time frame that you're trading on, you need that time frame to be moving in such a way that you can understand where the trades are going to be. You can understand the probabilities of the overall direction, and something that looks clean enough for you to actually navigate. One thing I want to talk about, because the markets have been in such a range overall. I got the euro dollar up right now. You can see this is kind of I don't really like to trade the euro dollar personally. I did years ago, but not so much these days, just because it does tend to range out. And for being the highest volume traded pair, that can actually be a bad thing, because sometimes it's like you have an unlimited amount of people willing to buy and sell at the same price. Then you just end up in a big fat range, and that's just not good for daily trading. So, but I want to use this pair as an example. Even if you are trading euro dollar, what I want to do is, like I mentioned before, is when do you start getting aggressive and when do you back off? And that is going to be represented by our expansion lines. When we come out of a box, for instance, we'll look at this. I got the weekly chart here. And if you're someone that's trading a 4 hour into a weekly, when a situation like this happens, when you have a weekly chart pop out of a box and then it swings down, we come down, we test the range of the expansion, and then we pop up. At this moment right here, literally on this weekly candle, that's a situation that you would probably start getting or you should start getting very interested in that. In here, you can see we had a lot of big moves coming up the weekly chart here, and you had weeks and weeks and weeks of nothing but buying opportunities. But what I want you to understand is that when you first get that new expansion, you come out and the range opens up, you need to get aggressive right in here around that expansion line, because this is giving you that level. Remember, price hates expansion. It hates those white lines, so it wants to get away from them as quick as possible. Here's an example right here. It got up. It wants to get away from that. Here it is again. Wants to get away from that. Here it is. You'll see it all day long. Even this one. It pops up, needs to get away. So that's why that line is always your tipping point, whether you're buying or selling. You're always using the last expansion line to tell you which direction to trade. So But what traders tend to do is that whatever your system is, they'll watch a move go by, whether they're using a moving average or whatever they're using. They'll watch it go by, and then right about up here or up here, then they'll start to feel like they're missing out. The FOMO sets in, and then they feel like they start getting aggressive up at the top, and then they get caught in the turn, and they end up getting in a bunch of losing trades, or they get caught in a ranging situation. The way that you guys need to look at this thing is that when you get that first expansion line, that is where you need to start getting pretty aggressive as far as finding that overall move that's going to happen away from that expansion on your lower time frame. The farther you get away from that expansion, the more strict you need to be to your directional bias. For this one, it was long on these weeks, but you need to start backing off as price gets further and further. I'm not saying don't trade it, but I'm saying don't, lot up, don't max out leverage. Well, you should never max out leverage on your account, but don't get crazy the further and further it gets away. You need to get less and less and less aggressive, because eventually that market will turn into a range. It'll go back into a box. And these areas are where traders give back all the profits. It's like for lack of a better illustration, it's like the casino. This is where the casino's collecting money, is in these boxes. They're collecting all that money back from the traders, and then the trends is where that's the payout cycle. That's where they decide to pay out. Up here again, this is all casinos collecting. You get the white line, that white dot, the first time that appears, then that tells you, hey, guess what? The machine is about to pay. I don't gamble, but that is like I said, for lack of a better illustration, that's essentially what we're doing here. It's like you're only going to play machines that are ready to pay. So when you guys are timing the market volatility, you have a as good as it gets to let you know when the thing's about to move, and you have an extremely accurate definition point of long or short. But you have to use those to help you time yourself. Don't trade like the rest of the masses and get crazy at the turns when it's just gone and gone and gone and gone, and you've been too timid to get in. You got to get aggressive. You got to get a chunk out of that market when it first starts to take off. You're never going to get better timing than right at those lines, and that's really where you can, if you do want to use a little more leverage or you want to layer on more positions, that's where you can get aggressive, because you're at literally the tipping point. It's either going long or it's going short, and then as it deviates away, you'll find that direction, and then you'll take some meat out of the trend that's going to come right after that. Even when you get into some tight ranges like this situation, you can see we had the weekly pop out of the box right here, got rejected by expansion, but at least you knew you were long, and this is real tight. This is a tough market to trade. You got to really rely on that timing when you get those new expansions, and the further you pull away, you got to start backing off. You got to get less aggressive. Right now, we got a new expansion on the weekly here on the on euro dollar right here coming short. Let's take a quick look at the monthly. Okay, so like I said, the weekly's in a range right now on the euro dollar. Right. So if the time frame that you're using, if it's undiscernible or it looks so choppy, then step up to a bigger time frame. I know a lot of trading platforms, the biggest time frame you're going to get is a monthly. That step up is as far as you have to go to decipher. If you're set on finding a trade in that pair, you need to keep going up the time frame until you find something that makes sense and it's clear. Right now, this looks like you're getting a rotation out of the monthly. All the chop that we've had on the weekly and daily basis has been these couple of months here that basically just the overall trend's been taking a breath. This thing is probably going to end up pushing down. I don't know for sure. We'll have to react as it happens. But there's another 440 pips down to expansion. So that is probably your next gap on the monthly. Okay. If that doesn't happen and it decides to range out, then it's probably going to come back here up about 775 pips to the last expansion. The thing with the expansion lines is they're like magnets. It's like the price is just magnetized to those expansion lines. They're basically like the true center of gravity. But once price actually gets there, it hates it. It doesn't want to be at the expansion line. So So it's kind of a love-hate relationship with price. They want to be drawn to those lines, and then they want to get away from them as quickly as possible. So, those are definitely good price targets to use when you're trying to plan out these trades. Anyway, I don't want to get too off track, but like I said, what I want you guys to do is to get more aggressive on those situations with the boxes. When you get a new white line, even if it doesn't have a box, any kind of time you get an expansion, start getting a little more aggressive, because you are going to pull away from that line. It may not be immediately, but that is your tipping point for price. So get aggressive around expansions when you get new ones, and then back off as price pulls away, because that is the move materializing. Like I said, I'm not saying don't trade it, but get lighter and lighter with your position size as you do draw away, because I don't want you guys to give back your profits in the boxes. I want you to see that white line, get aggressive, take some meat out of the market, and then back off. And once you see those boxes, and if you can avoid 2, 3, 4 weeks that is inside of a box, those are weeks that other traders are just getting decimated. They're getting killed. So I want you guys to avoid that. That's one of the big advantages to using the system that we use. So that being said, there's not a whole heck of a lot again this week that I see that I'm super excited about. There will be moves, there will be trades, but nothing I see as of Sunday afternoon that is like what I think is super great. What we could do is I'm going to jump over to dollar CAD real quick, because I know a lot of my guys, a big percentage, are just married to dollar CAD. They're just kind of roll with the ups and downs of it. So I'm probably a lot of these sessions I'm going to use dollar CAD, just tie it in somewhere, just because I know that a lot of people benefit from that analysis. So let's jump over there and get that real quick here. Okay, so we are on dollar CAD. I know last week we were kind of using this as a reference. Remember, we were right up here, and I told you this is going to be the tipping point, because we were at this expansion. We ranged back up a couple days later. The only noteworthy move we had yesterday was pushing down here, coming close to this expansion range here, and then we got rejected there. So overall, we're basically sitting in a range between these expansions. Price is just it's getting magnetized to them. It's getting rejected. We are getting ready to push through one of these levels. What I'm seeing on the weekly right now is that we just got a new weekly candle. At least on my platform. I know different platforms sprout new candles at different times sometimes. So I see that candle is red. So what I'd be looking at, the tipping point of where I'm going to really start to take this week seriously, would be once we get this daily gets under expansion level here. I know that's going to be a tipping point. If the daily crawls down, and then we get some movement down below here, and we start to hold below this expansion, what that's going to tell me is that this weekly is probably getting ready to push, or the weekly's getting ready to push on that scale. So I'm going to use that knowledge from the smaller time frame to kind of predict where that weekly's pushing. And then, so if I'm going to do that, if I feel like the daily's holding under expansion, the trend's going to continue, then I'm going to look at, well, where can the weekly be headed? And the weekly could be headed back down to test this expansion and possibly blow through it down to our liquidity line down here. So right now the gap I'm working with is where we're sitting right now, and to expansion is about 220 pips short. As of right now, that is where I'm thinking it's going to go if we go short. Now, the opposite of that is that if we do rotate long, and again, this is what I'm using for my reference, because we don't have a new expansion at this point. That's right here, so we're going off of these last two to give us our framework. If we do rotate long and push through this expansion here, then we are probably most likely going up to test this expansion, which is 197 pips away, and if we blow through that one, then we are headed up to this liquidity line up here, which is 362 pips away. So that's the range that I think we're working in. Is either we're gonna hold above this expansion here if we rotate long. If we stay short, we're definitely probably coming back to this expansion here, and then we got to see what happens. Like I said, if this week has not closed red, this is if it stays red, you do want to be careful on the weeks that are the first of a new series of colors. If it's the first red, then you really want it to see it confirm red, because the best trades we get is when we get these long streaks of weeks just one direction. That's really where it's just, you get those days are just a handout, and we kind of wait for those and count on those. You've got to be careful around these turns. So whatever you do, like I said, just be careful. Right now, what we're talking about before is getting aggressive, not being aggressive. Right now, I would be aggressive about figuring things out, not necessarily trying to leverage up and put on big trades. I don't think it's quite there. You want to wait for that sense of knowing. You want to wait to kind of settle on right now what we're working with, those two expansion lines. You want to wait to settle on the short side or the long side, and just kind of feel it out. Let the information come to you. Let the chart, let the algorithm build you more architecture to work with. If you don't have enough information on the screen, wait till you get enough. You'll eventually, the more you use this, the more you get to a point where you'll see, you can look at it and be like, there's a trade or there's not a trade, and you'll be able to tell right away. And that's really what I want you guys to do. I want you to get to that point where you guys can just scan through markets and you can make those decisions very quickly. So anyway, hopefully this helps. Don't mean to go so long in this video, but hopefully you guys got something through that. Timing volatility, that's one of the best pieces of advice I could give, especially new people. Wait till you see those new white lines and then get aggressive around those levels. And those levels where you're getting those new expansions, those new white lines, that's going to tell you where the market's going to head, and it's going to give you that information you need to put probability in your favor. So with that being said, everybody have a great trading week, and we will see you on the next video.